together to do these kind of events. It's really fun. So I wanted to acknowledge everyone. We're proudly co-hosted by Nova Scotia's Regional Enterprise Networks, mine, the Western Regional Enterprise Network, the Valley Regional Enterprise Network, Truro and Colchester Partnership for Economic Prosperity, Pictou County Partnership, Cumberland Business Connector, the CBRM Regional Enterprise Network, and Cape Breton Regional Enterprise Network, as well as the Restaurant Association of Nova Scotia in partnership with our region's business community and champions. And we're all joining from our communities virtually, and we're so lucky to be able to do so and kind of gather in this way, thanks to technology. Each of us is seated within our land, and I'm going to do a land acknowledgement right now, that we acknowledge that we are gathered on the traditional, ancestral, and unceded territory of the Mi'kmaq people who have lived on and cared for this land since time immemorial. This land is part of Mi'kmaqi, the traditional territory governed by the peace and friendship treaties, which remain foundational to the relationship between the Mi'kmaq and settlers. We honor the Mi'kmaq as the past, present, and future stewards of this land and recognize their enduring connection to its waters, forests, and communities. In this spirit of reconciliation and respect, we commit to fostering relationships built on trust, understanding, and a shared responsibility for the land and its peoples. All right, so we're going to move forward with an introduction to our two panelists who are going to be giving some talks today. Guillaume LeBlanc first. He's Senior Manager of Indirect Tax at Doane Grant Thornton, LLP, covering the Atlantic region. He has 15 years experience in the indirect tax sector, working in GST, HST, QST, PST, and all other indirect type taxes like luxury tax, underused housing tax, carbon tax, etc. And he's going to talk about how this contemporary or temporary tax break works at an accounting level and what your business will need to do next. We're also joined by Kendal Steele. Kendal is originally from the East Coast and now finds himself practicing tax law in Toronto at Rosen Associates Tax Law and via his professional corporation, Kendal Steele Professional Corporation. Kendal's practice focuses mainly on tax dispute resolution and tax protection for both businesses and individual taxpayers. Kendal's an experienced tax litigator who appears regularly in the Tax Court of Canada, and he's going to talk about potential legal implications of following the tax break process. Now, again, as mentioned, we're going to do these presentations. Put your questions as you think of them in the Q&A section, the button at the bottom, and we'll get those at the end. So there's your opportunity to get your questions in. And let's get started with a big hello and thank you to Guillaume LeBlanc. Guillaume?
Thanks, Wade. I'm going to start sharing my screen. Let me know if that works.
Looks good.
Looks good. All right. So I apologize if I sound a little raspy. I'm actually visiting the other side of the country today. So I'm in Victoria, BC, for a tax conference. So but I couldn't miss the opportunity to come talk to you guys about the tax implication or the accounting implication of the GST HST holiday break. So I prepared a few slides for you guys this morning to go through, and happy to answer any questions that you guys may have at the end of this presentation. So like Wade said, I have been with Doane Grant Thornton. I have to start saying Doane because it's been a change since October for us. We've added Doane at the start of our, as a prefix to our Grant Thornton name. So it's very exciting for our firm. I've been with the firm for 15 years, all in indirect tax. So I have a bunch of experience on all the different types of indirect taxes out there. But most of the time I work in Atlantic, so I deal with the GST, HST, and because New Brunswick is so close to Quebec, I also deal a lot with the QST as well. So Doane Grant Thornton, where I just wanted to kind of talk a little bit about us. We have over 80 offices across Canada, more than 3,000 colleagues. As you can see, we're pretty spread out across the country. Our indirect tax team is around 25 people today, and we're spread out pretty much across Canada as well. So we do have a lot of support for our clients out there, or any new clients that have some indirect tax questions or issues. So the temporary GST HST relief, I'm not going to go in too much details about the stuff that has been or that was affected by the holiday tax break, just because at this point it's almost at the end of the break. So, but most of you would have noticed that a lot of foods, restaurants, um, a lot of snacks, including chips and stuff like that, were affected by the break. There was some more targeted items like children clothing or children toys that were affected as well. I've added a list here just so you guys can have a look. I'll share my presentation after this so you can have a look. But these were the items that were kind of the qualifying goods that were affected by this holiday break. So I'm going to focus a little more on the reporting and the accounting of this holiday tax break. So the first notion that I kind of wanted to bring up was the exempt versus zero rated. A lot of people assume that because there's no tax, the good or the supply of the good is considered to be exempt. But really, it is considered zero rated, which means that it's still considered a commercial taxable supply. It is just taxed at 0%. So the main difference between exempt and zero rated at a high level is that when you do make exempt supplies, you are not able to recover HST paid on your expenses. But if you do make zero rated supplies, you still all are allowed to claim input tax credits on your expenses. So this means that the because of the holiday tax break, everything that was taxable before that were affected that are considered qualifying goods would now be zero rated. So it does not impact your ability to claim your input tax credit. So like the accounting for input tax credits would be the same as it was before. You get to recover all the HST that is paid on your expenses. The only difference is that for the 2-month period, you did not have to collect HST on your revenues. So having said that, the filing of the GST HST returns and the claiming of input tax credit um, should not change too much from what was done before. The only difference is that the revenues will remain the same on your line 101 of the return. So you would report all the revenues earned during the period. Um, the line that will change is the HST collected line. So if all you did was supply qualifying goods, for example, a restaurant, unless they had some stuff that was still taxable, it is possible that the HST collected line for the 2-month period will be zero because it was all the supplies were zero rated and not taxable. And then the ITC line 108, would still be the same as it was before because the supplies were zero rated. You are allowed to recover all of the HST that was paid. So from an accounting perspective, the return will look differently, but it may not look that different just for that 2-month period. Now, the legislation that was released says that in order for the qualifying good to be considered zero rated, it has to be the payment and the delivery has to be before the February 16th date. So if you are invoicing or if there are some invoices that are done on February 15th, the delivery would also need to happen on February 15th in order for them to be considered tax at 0%. If the invoice is done on February 15th, but the delivery happens later on, those would be subject to GST, HST as they were previously. In situations where maybe the GST, HST was continued to be collected during the relief period, I'm sure some businesses may not have been able to change their system. Maybe they didn't believe or they didn't want to change their system. If it was collected, it needs to be sent to the government. Um, there could be some issues with the customers, especially if the customers were not able to recover the HST paid. Um, if the if the supply was made to a registrant and the registrant did not really care about paying the GST HST because they were going to recover it anyways, you would still have to remit and the recipient would claim an input tax credit. So it is possible that there was some discussions or contracts with other customers or retailers where they just decided to not um, not treat it as zero rated and continue to treat it as taxable. I know some of my clients asked me that question at the beginning to see if all their customers were able to recover the GST HST paid anyways. Did they have to change their system? So a lot of them entered into a handshake agreement to just say we're just going to keep doing it like we were doing it. You can claim your ITCs anyways. Um, the main issue with that is that when you're sending it to a consumer, the consumer generally will not be able to recover the GST, HST paid. That would be individuals like us. So in that case, if they still charge GST, HST, they would have sort of done so in error. So there was the ability for consumers to go back to the businesses where they were charged HST on qualifying goods, stuff that they should not have been, and ask for the HST back. In that case, there's the opportunity or the ability to issue credit notes, which allows them to refund the HST that was charged in error to the consumers. When it comes to CRA, it is possible that CRA will question some of the returns that are filed during this qualifying period, just because it will look different for a lot of businesses that maybe were in a payable position at some point that may not be anymore for those two returns that they will file for December, January, and part of February. So in that case, it should be a pretty easy. It should be pretty easy to answer CRA's questions as to why there might be a variance or why it's different, because it is basically just because the qualifying goods were not subject to tax for that 2 month period. So I don't know how much questions we'll have from CRA. It's kind of hard to estimate if they'll look into it, but it was the rules for 2 months, so I suspect that they may be more lenient in looking at tax filings for the last 2 months from a GST HST perspective. And I think that's it for my presentation.
Excellent. Thank you very much, Guillaume. I really appreciate that. We do have one question, and I might as well ask it now. Since we record all sales, how will the government verify that registrants are charging correctly for liquor sales? And that comes from Jonathan. Jonathan, thank you very much for that.
Well, so the sales, and businesses don't are often in multiple buckets. Like some businesses will be fully commercial and charge tax on everything, but there's a lot of businesses out there that will have a mix of taxable and zero rated or taxable and exempt supplies. So the revenue line, you would just put all your revenues on there, and it is possible that the HST collecting line will not be exactly 15% of what the revenue line says, but that's okay. That's when CRA may say like, okay, well, based on our calculation, you should have like remitted 15% of 100,000. We would expect to see 15,000 of HST, for example, and then you would say, well, out of my 100,000 of sales, I had 25,000 of zero rated sales, for example. So that's why I only remitted a quarter of or 75% of what you expected me to remit. There is also an option when you're filing your HST return online to separate the taxable from the zero rated revenues, but you don't need to do that. You might have a call from CRA and you would just have to say, this is why it's not exactly 15%. It's because there was some zero rated sales in there.
Excellent. Okay, thank you very much. Excellent. Okay, thank you very much for that. Much appreciated, Guillaume. From there, we'll move on to Kendal Steele's presentation. Again, Kendal, originally from the East Coast, now practicing tax law in Toronto at Rosen Associates. Kendal, thank you very much.
Awesome. Thanks, Guillaume, and thanks, Wade. Hello, everyone. Good morning. As Wade mentioned, I'm coming to you from Toronto here. I'm going to just share my screen quickly. And then if I go presenter view, can you guys see the slideshow properly, or is it
So right
showing
now
presenter
we
view?
see the back end of the presentation. So we see each individual
right.
slide and all that kind of thing.
Okay. So is that view? That's okay. That's viewable, or should I play from start like that?
Oh, there you go. Now it's up.
That's better.
Yeah.
Okay. Perfect. Sorry, don't use PowerPoint too much these days. Okay. So yeah, as Wade mentioned, so again, my name's Kendal Steele from Toronto, working at Rosen Associates. Just to give you a little bit about the firm, so it's a boutique tax firm in Toronto. We tend to specialize in tax litigation as well as tax protection. We do a little bit of corporate solicitor work, but it primarily relates to our tax protection work. And by tax protection, I mean if there's businesses or individuals who need to come up with creative strategies to protect their monies from tax legally, of course. We help with that. We'll often run into, for example, sole proprietors or smaller businesses who want to incorporate or set up a few holding companies or figure out how to tax plan before an estate or different things like that. But I would say our bread and butter is tax disputes and representing taxpayers against the CRA, primarily at the three levels of dispute, being at the audit division level, at CRA appeals division via objections, as well as at the tax court level. We also represent clients who do judicial reviews to the federal court, and then kind of everything in between there, taxpayer reliefs, voluntary disclosures. I'll run through all that stuff at the end, but that's kind of the full scope of what our practice tends to focus on. Of course, if you guys have any questions after this, you can feel free to reach out to me. My email is I believe it's been sent around, but it's just Kendal at Rosen Associates Tax Law. It's all on our website too. But yeah, one other thing too, I believe I sent a little document, little 5-page document to Wade to send around after the presentation. That document just contains, I think, some solid sort of background information and a little bit of history on the act, and just some of the things you should know that I think might be a little bit boring to listen to me talk about. But I think that sheet should be helpful to hopefully fill in any gaps maybe that I miss here. So feel free to give that a read after, and you can take that with you, and of course let me know if you have any questions on it. But yeah. So as we all know, we're here to discuss the GST HST tax holiday. And so the act was called the Tax Break for All Canadians Act 2024. My first few slides do hit on quite a few of the points that Guillaume hit, so I won't go through them substantively. I'm just going to go through those ones quickly and maybe get a little bit more focused in on the compliance side and what you guys might have to deal with if things were ever to go wrong. But I'll touch on the first stuff quickly. So of course, and this is just a disclaimer. So all this information prepared on a basis of the available legislation, publications, and guidance issued by Parliament, so on. There's been no interpretive case decisions from the court yet. So all of this is based on what the CRA is telling us and what the legislation says. There's been no cases on any of this stuff. And so one thing that I always try to tell folks is that, the legislation sets everything up, but there's almost always going to be gray area in between there in all legislation, and that's what the courts are for. And so just so everyone knows, there hasn't been any cases on this yet, obviously because it's been so new. And then, of course, just take this presentation as information, not tax advice. I'm sure every lawyer you've ever talked to has said that to you. So it's just more of a disclaimer for our protection. Yeah. So as Guillaume mentioned, the federal government made a policy announcement in mid-November 2024 that they were going to put this act through. The bill passed through in December 12th, 2024. One thing that folks might be also dealing with right now for you folks and participants here, I know the capital gains changes were announced. They were never put through as legislation yet, though. And so I know there's a lot of reporting and a lot of kind of work trying to figure out what is going on there. So unlike the capital gains thing that is sort of still in limbo and everyone's sort of still fighting over it, this Tax Break for All Canadians Act is legislation. So it is law of the land. I'm sure you guys know that, but I just wanted to discern between those two. So as Guillaume mentioned, the tax holiday runs between December 15th, 2024 and February 15th, 2025. So we're coming up in the end here. As he mentioned, to be considered within the eligible period for those, your sales must be paid in full within the period, and consumer receives the property service within that period. So those are just the two standard rules. And what's covered, I know that there was a list sent around it, and I know you guys have this, but the Act specifies a number of additions to the list of zero-rated non-taxable imports, non-taxable property and services. So as Guillaume mentioned, the important thing is just that zero-rated means it's a zero-rated expense versus exempt. For zero-rated, you can still claim your input tax credits for the monies that you paid to purchase expenses and so forth. So the items that are being covered by this new act are under zero-rated is the important thing to know. So you can still deduct input tax credits. Again, so in summary, kind of the things that are focused on with this new act, restaurants, catering, and other food or drink establishments. I know that's primarily what you folks are focused on, but food and beverages, and then all of the rest of the items here, children's clothing, jigsaw puzzles, all the way down to Christmas and similar decorative trees. I know there was one session that we were sitting in on at one point, and they were getting into the weeds of what is a small decorative tree, what is a Christmas tree, and they were talking about how as long as it's shaped like a Christmas tree, so some ornaments are tax-free, but if it's a tree, it's not. Anyway, so that's just kind of a different deep dive. But in terms of what is a zero-rated supply, so what you're actually focused on here, so ordinarily the GST HST is applied to taxable supplies, the sale of goods and services made in the course of business, unless the particular supply is either specified as exempt supply or a zero-rated supply. And so the distinction here that you kind of have to worry about is that on zero-rated supplies, you can still claim your refunds from your input tax credits on the HST or GST you paid whenever you incurred the expense. And then tax costs incurred in the course of making exempt supplies are not permissible claims for ITCs. So what is an eligible beverage, or sorry, what is an eligible beverage, which I know is kind of probably what a lot of the restaurants are potentially focused on. And so there's some specific language in the Act. These are kind of the main ones. So beer or malt liquor, wine, sake, fortified wines, or sake with not more than 22.9%, packaged alcoholic beverage with not more than 7%, mixed drinks, which contain only those alcoholic drinks otherwise permissible. I won't go through these in depth. I'm sure you folks have already read about all this, but again, happy to discuss in questions. So for food and non-alcoholic drinks, a lot of these are already specifically included as zero-rated supplies. So essentially, the way that they set up the Act is a lot of just the what are deemed healthy things can be zero-rated, whereas the items that weren't were things that they would consider, by they I mean the government would consider not healthy. And so that's the alcoholic beverages, cannabis products, carbonated beverages, non-carbonated fruit juices with less than 25% fruit volume. So all these things here tended to not be zero-rated before this Act for this eligible period. So in terms of if you're serving a mixed product, so if you're selling a food or beverage product which contains both zero-rated and non-eligible elements, the CRA's position is that these are not within the zero-rated provision of the Act, and the full tax rate must be applied. I know this is probably going to be the situation where people really aren't sure what to do. As a tax lawyer, the advice is always err on the side of reporting it and paying it. I really don't know, and we'll talk about this later on in the presentation. I don't know how aggressive the CRA are going to be in pursuing this. They will probably pinpoint select some restaurants and different businesses to go after on this. But anytime I'm giving advice on this stuff, I always say if you're not sure, just err on the side of report. Little bit, you pay a little bit extra versus underreporting. Sometimes it's just the cost benefit it's not worth not reporting it. So if you're not sure, that's my advice. But of course, speak with your accountant, and I'm sure you can get into the specifics of what counts, what doesn't, and especially with the mixed products. So these are just some of the examples pulled from the CRA website. So in terms of what if you're serving a mixed product, so mixed drinks containing carbonated soft drink or fruit juice with one or more alcohol, not specifically provided in the 5 categories of eligible beverages. That'd be like, I think I get into it later, but like a hard cocktail or like a well shot cocktail. Gift baskets would fall under here. There's some specifics there. The food delivery apps are kind of where you have to be a little bit cautious as well. The services that have been made zero-rated during the HST holiday will include delivery made directly by the restaurant, but not necessarily from a delivery app, potentially. Then there's the catering, like you wouldn't be able to zero-rate the charges for admissions or hosting entertainment or chef services. Those don't fall under the zero-rated. So a little bit more into kind of specifics of hopefully what you guys are hoping for me to discuss. So the compliance issue here. So one thing it's always important to note, and I always have to kind of have this conversation with clients, is the onus is on the registrants to accurately report and remit amounts owing each period. Because we're a self-reporting country, the onus is on the taxpayer. A major thing is record keeping is essential. So just make sure you're being as diligent as possible with your bookkeeping on this year. If you're worried about, if you're dealing with a lot of these and you're worrying about them, just make sure record keeping is really well done. Aggressive with bookkeeping and accounting to make sure. Feel free to ask questions of those folks, get a lot of clarity. I mean, that's always good advice, but especially this year. And then of course, an experienced and diligent accountant can prevent a lot of problems down the road. As I'm sure Guillaume can attest, I know Grant Thornton has a great reputation. So someone like them. So in terms of the CRA statements, here's what they want people to do. They just want people to make a reasonable effort to comply. Businesses who make reasonable efforts to comply with the legislation will not be the focus of our compliance actions. We will be focusing on situations where businesses willfully and egregiously refuse to comply with the temporary measures, such as businesses that collect the GST, HST, and does not remit it to the CRA. So that's the important thing to note is I genuinely do think that they are trying to do this. I mean, politics aside, I won't comment on any of that, but I think they're trying to do this out of the goodness, and that they're not going to necessarily do this as a trap to get people. That whenever you're arguing on the other side, if you were to ever get reviewed or audited, I think that would be a very valid argument to make. That look, like we tried, here's all the reasons we were compliant. If there is a mistake here and there shouldn't be any penalties or anything like that. I think that those arguments will be quite successful. So as long as the business was actually trying to comply. So that's why it's really important to keep, strong records as much as you can, emails to and from your accountant and bookkeepers asking questions. All of these things, just keep paper of showing you trying, and obviously do it as best you can to actually comply. But it's always good, and I always give advice to clients that honestly, when you're dealing with the CRA, paperwork is so essential, and just having correspondence and really being able to show that. So if you do see something goes wrong, or if you do notice something go wrong, it's important that you identify it early. One thing that you can do is the voluntary disclosure program. Again, like it might not be worth it depending on how much money it is that you may notice you made a mistake on. It depends how big your sales are and what your GST HST is. But taxpayers do get the option to make a voluntary disclosure application where they essentially come forward to the CRA after a year after the return has been filed. They come forward to the CRA and say, look, we missed here and this and this. Here's our updated return. Here's our application. Please don't charge interest or penalties. And generally those are successful as long as people were acting in good faith. And so, yeah, so those disclosures, again, affords taxpayers relief from penalties, and generally interest as well in self-reported situations of non-compliance. If I don't know if the CRA is going to pursue aggressive audits or audits. As Guillaume mentioned, there might be some reviews. The big thing is just making sure, I think, that all your financial records are in line, accurate, and they all match, and that you're able to kind of walk through, your general ledgers and if it's on your balance sheets or profit loss or all these different financial records that you would do with your accountants. Just making sure that all the things match, sales match if they should. If you are claiming GST, if you do have exempt supplies or zero rate supplies, knowing that might mean you don't actually hit 15% of the total sales paid, but being able to show why you don't is super important. Again, assuming you have things organized into zero rated and exempt and full taxable, that's important. So these would all just kind of fall under that zero rated sheet, if you will, or depending however you organize it. So just making sure that you're really keeping that organized, because if they do come and review or they do come audit you, it is so much easier and such a less headache and way less costly if you hire lawyers to respond. And so one thing that could happen again is they could audit your business for your GST HST trust account. If that does happen, here you should expect to have to produce all available documentation for review by the auditor. I also want to kind of make a note that they don't really they consider it retroactive tax planning if you are fixing up your books at audit and stuff, and so they usually won't take that as credible. Sometimes they'll say that company had sometimes it can get bad where they'll say they had bad books and records. We have to do an indirect verification technique audit and audit the company and the shareholder. If it's a company, obviously, if it's a partnership or sole proprietorship, that's a bit different. I don't know if that stuff will necessarily happen over this, but I always just want to kind of hammer home how important it is to have your books in order, have your documentation available. As the slide says, they make an adverse assumption of fact made where there's no documentation available. So, for instance, in this specific situation, say your GST HST paid doesn't match the exact percentage of sales, and then you just say, well, I had some zero rated supplies from the holiday tax break, and they say, okay, well, can you show me the Excel that shows the calculations, the tallies line by line of what your expenses were that were zero rated, or however you track it. And if you say, oh, I don't have that, they'll make an adverse assumption. That's just the way the self-reporting tax system works. They don't really, the CRA themselves, they don't believe taxpayers unless they can prove it. And so it's just really, you can also prove it by explaining, but documents go way, way, way further. Unfortunately, a lot of times, if we are going to rely on testimony, it has to go to essentially to court, and that can get super expensive. So anytime I'm advising anyone, I want you to pay the least amount of legal fees possible. I'm not interested in gouging people. I always just want you to make sure that all your documentation is essential. So just making sure that you're doing that. Again, so if they do audit, adverse assumptions will be made for no documentation. If you had all your documentation in order, you can explain why it's different. Perfect. If things don't go well there, they'll issue notices of reassessment. And this goes for any account. So I know we're talking about GST, HST specifically here, but if they audited your company on the income tax side, or if they audited you personally on the income tax side or any of that, Notices of reassessment are what come. And then, but on the GST, HST, specifically this account, because it's a trust account or funds held in trust for the CRA by the company, they can take immediate enforcement action on collections of the monies. So say, for instance, they deem after an audit that your company underreported GST, HST by 30K or whatever, and they charge you X amount, they can pursue that immediately. Whereas on the individual side, as an individual taxpayer on your T1 income tax account, or as a corporation on your T2 income tax account, they can't pursue you right away. There's essentially a 90-day window where they can't, where until they can come after you. And if you file an objection, then they still can't collect on it, and it has to go through the process. On GST, HST, because it's a trust fund held by a company or business on behalf of the CRA, they, under the act, it's their money, and so they can come after you immediately. So I don't mean to give you all this to scare you. It's more so just to say this is what can happen if they audit and your books and records aren't in order. So I mostly say this to make sure you're working with your accountants to just try to make absolutely sure that it's as clean as possible, paperwork set in stone. And this isn't just for this. I'm kind of giving this spiel for all your business if possible. I also understand, I run business myself. I understand it's not that easy all the time. Business is messy, and sometimes it's hard to keep all this in order. But this is the best standard, that the proper standard that they expect. And so when they come knocking, you're going to want to have it in order. And so I just see so many, I obviously deal with people every day, unfortunately, that just didn't quite keep it in order, and we're trying to piece it all together. So I just always give that as a note several times during presentations. So again, I'll kind of go a little fast through this last stuff, but if you are reassessed for any reason, you can file that objection I mentioned. So notice of objection, that's where you essentially file, there's a bit of paperwork and you click some buttons on the CRA online account and you basically say register dispute. You have to give them your facts and reasons. And so you have 90 days to do that from the date that you receive the notice of reassessment. And then you'll basically argue your case at that level. It's an independent third-party reviewer at the CRA level. In the legal terms, it's an administrative tribunal at the CRA. And so generally you're providing your appeal to them, you're explaining to them why the auditor was wrong, so on and so forth. And again, having documentation just solves everything. So you can explain it, you can argue it, you can ask for sympathy and stuff, but they only really care about, does it match? And so then the other thing would be, applying for discretionary relief for late filed objections by way of application. So if you don't file an objection within the 90 days after the notice of reassessment, you generally have up to a year from that date to file, but you have to file an application for extension explaining why you were late and so on and so forth. I would try to get the objection in within 90 days. What we do as legal counsel is we'll essentially file, especially when it's GST, HST, and our clients have to pay the money right away. We'll file a preliminary objection the day we get the reassessments. That day to get the person in queue, we won't wait. And that can just be a 1 to 2 pager saying we dispute the CRA was wrong in their assessment. The documents will prove otherwise, so on and so forth. Please assign an officer as soon as possible. And then from there, you get yourself in queue right away. And then you can kind of work on your submissions over time. They generally assign someone in like 6 to 12 months, and then you go through your process. Then just, from a practical, pragmatic business owner's perspective, I know, if you have to pay your GST, HST debts that are allegedly owing, and then it sits for a year, that's a lot of money you're kind of sitting on, waiting on, that you could really use. So I always just advise folks to file the preliminary objection immediately, get yourself in queue, and then you're going to have to pay off the GST, HST during that time, get to work on your submissions, and then submit. Of course, retain counsel if needed, or a trusted accountant. But I always just want to hammer home the pragmatism of GST, HST having to be paid and how quickly you should file your objection. And if you're still unsatisfied after the CRA appeals division process, and your notice of objection, you can appeal to the tax court, and that's via a notice of appeal. And then at the tax court, you would have a judge who's of course impartial, independent, third party, has no affiliation with the CRA. They would be the one to review the dispute. And that's a whole other can of worms, and hopefully you don't have to go do that for this specific issue, but I just kind of wanted to give you a high level of how that process works. And of course, again, wouldn't be for this issue, hopefully, but if you didn't agree with the tax court decision, this is very few in between, this doesn't happen a ton, but you would appeal to the Federal Court of Appeal. And if you didn't like it there, you would go to the Supreme Court. So that's just kind of the quick how it works in terms of the courts. One of the final things here that I think you should know is, if things go wrong, and if you don't like, you get audited, you get hit with GST, HST, they charge you penalty. If they charge you penalties and interest, and you couldn't get it removed, at the CRA appeals division, or you wanted to just do this beforehand, you can apply for what's called a taxpayer relief application, and that's essentially where you can ask them to waive penalties and interest on tax debts that they charge you. The legislation gives the CRA discretionary power to waive penalties and interest dating back 10 years, generally for most of the accounts. And essentially it's for reasons that they would give you interest relief if you could explain the reasons why the situation was out of your control. And the three grounds that you would argue under would be extraordinary circumstances like natural disasters or serious illness, errors or delays by the CRA, financial hardship where payment was not possible, and then any other reason the CRA would consider valid on a case-by-case basis. And again, I mentioned earlier the voluntary disclosure program. So again, if you find out that you didn't report correctly, there's been a year that's passed by, and you want to come forward and say, hey, I didn't report correctly, can you waive penalties and interest? You would do it through the voluntary disclosure application. And then to be eligible, disclosures must be voluntary, completely unprompted, complete and accurate, involve a potential penalty, be made at least 1 year past the filing date, and include payment for any related taxes owing or a request to establish a payment plan. And so it's essentially just a quick letter, a form, the new tax returns or the adjustments, and then the payment receipt. Or if you can't pay it all at that time, you say, here's what I can pay, and here's how I propose to pay the rest. And that's it.
Excellent. Thank you very much, Kendal. It's much appreciated. We
problem.
do have a spot for questions and answers, and we don't have any questions right now at this moment. But if anybody would like to put a question in, please do so. It would be much appreciated, and we could continue this discussion from there. Kendal and Guillaume, both excellent presentations, and it's much appreciated. Not really seeing anything.
Maybe while we wait a few minutes for some questions, quick question for Guillaume, maybe, and I think you touched on it a little bit, and I know you can't speak to it specifically because obviously CRA and the government will have to make the final decision on these kind of things. But let's use a case because I did see some restaurants recently have asked the question because I think they've, they got confused and there were some things they charged tax on. They didn't mean to do it. Probably not a regular thing. It just happened once or twice. What if they want to err on the side of caution and report it and get it all done correctly? Is there a specific way of doing that so that you can say, yes, I collected tax on these things, even though I shouldn't have. It was a mistake. Here's the tax. We're remitting it to you. Here's the things we didn't. Or is it just put it in and hope for the best?
Yeah. So you would just follow as normal, and like Kendal said, just make sure you have the documentation. So if you reported or collected HST on stuff that was possibly affected by the tax break, and you don't know who the customer was, or it's impossible for you to know who you charge tax to, as long as you remit it, there's no special disclosure to do. You would just send it in, but it's just keeping that documentation to show if CRA does ask, they likely won't ask if you send them more money than you needed to, because that means there's more money in their pockets. But just keeping the documentation to show that you collected HST, possibly in error, but you're remitting it anyway, so you're on side on that for that. So there's no special reporting, just send it in.
Thank you.
I was gonna maybe jump in on Jonathan's question earlier. Since we record all sales, how will the government verify that registrants are charging correctly for liquor sales? I think Guillaume handled it perfectly. I think that his explanation was pretty much what I would have said. In terms of the pragmatic how, So I think I hit on it during my presentation, Jonathan, as well. But they'll let, like, to give you what would actually happen with the CRA. They would send you probably a review letter to your corporation or to your sole proprietorship, depending how you're operating that restaurant partnership. And they would say, this is a review letter. We're reviewing your GST HST account for December 2024 to whatever your reporting period is for that GST time. And they would say, could you send us all your records for that period of time? That's where you have to talk to your accountant or your business partners and say, okay, we need to make sure everything looks in order. Does anything not look in order? Let's make sure it's clean, or we have explanations as to why XYZ is the way it is. Making sure that all your Excels are in order in terms of those kind of what we were talking about, those sheets that clarify what's zero rated. If your HST paid wasn't in Nova Scotia 15% of the total sales, just be ready to explain why. And I generally do that from the very start. I just put a cover letter. I say, here's the records that you're asking for. Here's, this obviously is different on every single tax issue, but for this specific issue, you would say, GST was, sales were this, GST was this. Here's why. Here's the listings of zero rated from this period. Let us know if you have any other questions. Then they'll review everything. And then based on that, they might just say, oh, yeah, good. And usually if you're proactive and you give them that good explanation up front, you clarify it, give them the docs, they'll say, okay, they got things organized. We'll close this review. It can happen. You want to make sure those books and records are accurate. Sometimes, you obviously deal with the other side where people's books and records are not accurate and they're a mess. And so you got to get a little, not creative, but you got to be ready to explain everything and be able to, you have to do cost benefit analysis of everything at that point and what to say, what not to say. And so that's why we're hammer, make sure documents are all in order, because it makes your life a million times easier and it will close that audit a lot sooner. And also you won't have to hire a lawyer or anyone and like waste money on that. And so just kind of in terms of how, that's generally how it'll work. They'll send you a letter or they'll call you. One thing I always caution people too is if you are using an accountant or a lawyer, just make sure you're conferring with them before you communicate with the CRA on those reviews. Often it's much more effective to have one person be the person who's communicating, so they know all the communications that's going to and from. When we represent people, that's almost an automatic rule. Just because if they say anything that is inconsistent with what we say, even if they just slip and say something that they don't even mean, the CRA writes it down and they rely on it. And so that's kind of one thing that I always just say is just, if you are using an accountant, maybe they do all the communication. Maybe you're on all the calls together or all your letters go in together. If you're hiring a lawyer, same thing. Just make sure that, it's consistent communication. You have your records as best you can. Your documents are organized, and that you are kind of, if you are in the right, you're upfront as early as possible to that review officer. And then that'll make your life a lot easier.
All right, thank you. We have some questions now, a few of them actually. I have 4 in front of me. 2 of them are fairly similar, so I'm going to ask them together. First from Lisa, what will be the procedures if a company does not pay their invoice prior to February 15th, 2015 with regards to the HST? And kind of on the similar kind of an idea, Joan asks, if we send out an invoice for event charges that include tax-exempt food and taxable room rentals, so you got one that's tax-exempt, one that's taxable, and service fees, does the whole invoice have to be paid by February 15th or only the food section?
I think for the to answer the question, I think if it is not paid before February 15th, I believe that on February 16th you should reissue the invoice with HST, because it doesn't meet the qualification of it being delivered and paid. So if that's the case, if you're dealing with a corporation, it is likely they will be able to claim an ITC back anyways. So if you're dealing with some consumers that are individuals that can't recover the HST, I would suggest maybe having something in your system to, or maybe having a reminder to give them a call, or making sure you receive payment before February 15th, so that they're aware that if they don't pay before the 15th, will have to pay HST on top. For the invoice that has multiple supplies, I would probably suggest that maybe if they just want to pay the food one, you should prepare a separate invoice just for the food, just to avoid any confusion as to what was paid. Because if you have an invoice that has a bunch of different supplies and the consumer only makes a partial payment, um, I think there could be some issues if like CRA could question whether that payment was made for the rooms instead of the food, or so I think it would be good to separate the food in that case, send a separate invoice for that, and then have the rest on a different invoice. Kendall, I don't know if you agree with that, or
Yeah, I think that's perfect. That's exactly how I would do it. And was it Joan? Was that the right name who asked the question? So Joan, I think so Guillaume answered that I think correctly. That's how I would approach it. I would probably for the second half of the question, I would potentially separate them and say, okay, can you pay the food part in the period? No GST, HST. Honestly, as someone who chases clients for invoices fairly frequently, might be a good way to sell, getting them to pay that portion of the invoice sooner, saying, hey, I'll separate these into two. The food, can you pay it by this date? You don't have to pay GST, HST if you pay it by this date, and then we can pay the rest after the date because it's not a zero rated supply anyway by the period. Might be a way to get them to pay the invoice, half the invoice sooner or whatever too. But I think what Guillaume said would make sense for sure.
All right. Thank you. From Kit, I was wondering if you could expand on the exempt versus zero rated tax. What would be considered exempt?
so exempt supplies, there's different provisions, but it's I'll summarize. It's mostly medical services, some sale of land by individuals, like personal owned land. So it's very specific. It's not there's not a whole lot of like goods or food that would be exempt. I don't think there is any. So it's really when you go to the doctor, dentist, their services are exempt. They may be like some of the appliance they sell you may be zero rated, but for the most part, it's medical type services. There are other specific things, but um, like those would be really specific and likely would not be impacted by any of the stuff that we talked today. So,
Okay, thank you. Jonathan asks, is there any indication that CRA may have a more lenient materiality as the majority of the restaurants will show less than 15% in HST? It just feels like they're setting us all up for failure with the report and cross your fingers procedure in place.
Could you repeat that one? Sorry, I was just pulling up the exempt supplies to put in the chat.
well,
There
I
we go.
can take it, Kendall.
Sure.
I'm sure they'll be more lenient for sure. It's hard to tell. Like Kendall talked about, like they may still do some target review of certain restaurants if they think that maybe there was some restaurants that may not have charged HST on some liquor sales or some cocktails that could have had HST or maybe delivery fees or something that wasn't impacted. But for the most part, I think they're going to know that restaurants will not remit HST for the most part for this 2 month period. And I think it's going to be factored in their review that they're going to be more lenient, especially for that 2 month period. I suspect that they might look at like 4, 5, 6 month period to see like how the sales were before, maybe what happened in between. They'll be more lenient and making sure that you went back to taxable after the February 15th date. But I don't suspect that they'll dig too much into this 2 month period.
Okay. We're starting to run out of time. Jeremy, do we have time for more? I think that was a thumbs up. I'm going to ask.
It's funny when you want to talk out loud. If this were a regular seminar, we were at the front of the room, I would just start talking. However, as windows for the chat and for the question and answers all overlap my audio button, I can't unmute
Sorry.
myself very quickly. We do have just a few more questions, maybe just to answer a last question or two, I think.
Okay, excellent. Thank you. Who holds the liability for HST at the end of the period? For example, provincial liquor bodies like NSLC or ANBL have your order and pay in advance of delivery, and delivery is done separately from them. Is the customer or vendor responsible to report and pay the HST?
That would be the vendor. So if they charge, or if they didn't charge you HST and they should have, it's on them. So if maybe they collected but they didn't provide delivery and they should have amended the invoice, it's on the vendor to remit the HST, whether it's paid or not. So if something happens that you should have collected HST and you didn't, it would be on the vendor side. And if CRA is going to come back looking for money, they're going to go to the vendor and not the consumer. So,
okay. Nicole asks, if you sold to an international market, would that be considered tax exempt or zero rated?
so exports are considered zero rated. And so there's certain criterias to meet, but export sales are generally zero rated when they're made to a non-resident and delivered outside Canada or exported.
Okay, thank you. One more. If you have a guest that stays overnight, excuse me, but doesn't check out until the 16th, will they have to pay HST on their dining room bill that's been charged to their room?
Would it be paid after the 16th?
I think the idea is
think
it would be paid on the 16th.
that would probably, I would assume that would probably fall into the period based on the legislation. I would maybe ask them if they don't want to pay GST, HST to pay 15th. Some people
Just
would, if it's a person, if it's a personal person, right?
Exactly.
Individual taxpayer, I should say, not corporation.
Yeah, to err on the safe side, I would just make them pay on the 15th.
All right. That's what we have for questions. Guillaume, Kendal, thank you so much for this. It's much appreciated. I hand it over to Jeremy.
Sure. Wade, thank you so much. Guillaume, Kendal, everyone who's on the line. We still have quite a few of us who joined us today. Everything went really well from my side, although my side was purely making sure that all the buttons were getting pressed. And all the hard work came out through Wade, Guillaume, and Kendal. So thank you all for your information today. Thank you for everyone for coming. Thank you for those who provided questions and entered stuff into the chat. On behalf of the Cape Breton Partnership, our regional enterprise networks here in Cape Breton, but certainly the wider regional enterprise networks and Restaurant Association of Nova Scotia across the province, can't thank you all enough for coming out and for suggesting that this session happen. With that, I'll throw it back to Wade for final closing remarks and thanks.
Well, I think everybody enjoyed doing this, and it was very, very informative. So again, a special thank you to both Guillaume and Kendal for putting this together. A huge thank you to you, Jeremy, and the Cape Breton Partnership for organizing this and making it happen. And I can't emphasize enough how much fun it is to be able to partner and make these things happen. So let's do more in the future. It's really appreciated. And to everybody who tuned in and spent this part of their morning together with this presentation, it is much appreciated. Thank you.
Thanks, everyone.
Thank you, guys.
Goodbye.